Okay, welcome everybody to Wall Street Reporter's Discovery Day live stream. For those of you just joining now, again, welcome to the Discovery Day live stream for January 27th. I'm very excited to bring you a new company, Victory Square Technologies, VST on the CSE, VSQTF over the counter, and Shafin Tejani, the CEO of the company. And so Shafin is actually good. I think what we're going to do differently is usually I just start off with a Q&A when we introduce you to a company, but I want to have Shafin show you the full slides, because this company has multiple facets, and I think it's important for really to understand it. And we're actually going to have Shafin come back multiple times, so like maybe once a week for the next couple of weeks, because there's so many facets to this. It's kind of like he's got to show like every facet, sort of like it's like polishing. We're going to show a new facet, and it comes into focus. And it's incredible. So again, those of you who are new, our goal is to bring you those stocks which have 10x to 100x upside. So, these are companies going after multi-billion-dollar opportunities. These companies have multiple catalysts now in place to ignite that shareholder value, and really they're at that threshold of explosive growth. And I think if you watched today's presentation, I think you're going to be very impressed that Victory Square really meets those three criteria. So again, watch the presentation, ask Shafin your questions, and then decide for yourself if a VST, Victory Square, is going to be our next 10x to 100x winner. So Shafin, with that said, I'm going to disappear and I'll come back for the Q&A. Okay, so let's get this over here. And Shafin,
well, first off, thanks for having me, and I appreciate all the listeners kind of tuning in to learn about Victory Square. We have so much heat that we could probably be, tuning in every day to talk about something we're working on with you. But I'll kick off, and just before we kind of go through the slides, I'll just give the viewers kind of a bit of a background. So I started in the tech space, in the online dating space in the mid-90s. I saw how the internet was going to disrupt the way we accessed information, the way we worked, played, and communicate. We were very good at driving traffic to our sites. During the first dot-com boom, very few internet companies were actually making money. In the online dating space, we actually were generating a lot of positive cash flow. And what we decided to do was to buy, build, and invest in technology companies that could either solve a pain point in our existing business, or that we could drive users from one site to another. This is the core of, this is called the venture build model, which is the core of VST's business model today. Since the mid-90s, we've successfully launched over 40 companies in over 20 countries around the world, generating over $1 billion of market value. So there's over two decades of success getting in early in early internet, mobile, and today, and all the disruptive technologies of today. I think the big key there is being able to get extraordinary performance, because we are seeing things that other people don't see in advance, and that's been one of the strategic advantages of VST. There's that Wayne Gretzky quote, don't go to where the puck is, but go to where you think the puck is going to be. And that's kind of something that's been synonymous with our portfolio companies and our investments. Victory Square Technologies was created in 2017. The mission was to democratize access to the next best tech companies around the world. So to give shareholders ground floor access to the next tech giants before they're tech giants. Everyone always says, I wish I could have invested in Amazon, Google, Facebook, Netflix early on, where we're trying to find those next companies within our portfolio. Our portfolio is vast. We've got 20 plus companies working on subject matters such as blockchain, AR, VR, digital health, cloud computing, cybersecurity, and more. We're publicly traded. We're listed in Canada on the CSE, in Europe on the Frankfurt, and on the OTC QX in the US. So, there's a quote by a famous science fiction author, William Gibson, and he says, the founders who live in the future have the best chance of winning big. Over the next decade, we're going to see disruption across all sectors, across all geographies. I think COVID has accelerated, a lot of these advancements. In the past, we've seen what disruptive tech and innovation has done, from steam to electricity and telephone to what we've seen in the last 20 years with the advent of personalized computers, the internet, and everything that we see kind of on a go-forward basis. They've changed the way we work, play, and communicate. Right now is a very interesting time because I think over the next decade, we're going to see even more advancement, disruption, and acceleration. There are 5 platforms converging at the same time. Each platform itself is a multi-trillion-dollar opportunity, and these platforms are around AI, DNA sequencing, blockchain, robotics, energy storage. And what these platforms do is they open up tremendous opportunity. An example, of that, when you look at energy storage, if you think about smart cars, smartphones, smart TVs, robots, all these new innovations and technologies are closer than we think, given the breakthroughs in battery technology. So each of these multi-trillion-dollar platforms are going to open up a tremendous number of opportunities. And this is kind of what we're seeing and where our eyes at VST have been on for these next gen companies. This next slide, might be a bit dramatic, but it's a good point to kind of look at, the last 20 years. No one would have expected Sears or Blockbuster, or Kodak or Yellow Pages. These are companies that had such massive market share, 20 plus years ago. And I think the bet that a new upstart like an Amazon or Google or Facebook or Netflix, for that matter, could disrupt these companies would have been far-fetched, but it's happened. And we see with with this disruptive technology over the next decade, we think that opportunity is coming again. And this next new breed of companies that will be seeded around the world, leveraging these new platforms and technology to reimagine every industry as we know it, are going to be founded. And this is where there's tremendous opportunity, for shareholders, investors to bet on the next, big things. Ultimately, people will always want to, will need to eat, work, play, and connect. What's changing is how they do that and how companies deliver those to customers. And these new breed of companies are being able to rethink the customer experience, especially more so with this current pandemic, because they're more agile than some of these larger companies that are too big to move. These new breed of companies are able to reset the system, see what's not working, and be able to envision what may work, and to be able to solve pain points that we're having today, on a go forward basis. These are all the types of factors and facets of the type of characters and values that we look for in our portfolio company. Now, when it comes to investment criteria, there's the standard set, disruptive tech, market opportunity, product traction. You hear all these buzzwords, and those are all key in everything we look for. But there are a couple of other X factors. When you're investing in an early entrepreneur or in a company that's more in its startup stage, you're really betting on the entrepreneur and his or her team. Entrepreneurship and startups have been glamorized. It's not a hockey stick curve up. It's more of a roller coaster. So at these stages, one of the biggest keys is the management's ability to improvise, adapt, and overcome, to almost tame the roller coaster. So our investment criteria, there's the standard set of things that we look at, but we feel like we're a very good judge of character and good at spotting undiscovered talent. A lot of your viewers may be familiar with this. One real life example is Fans Unite. You've had Darius Gami and Scott Burton on. Those guys were rock stars and leaders and thought leaders in esports and in the sports betting space. We just happen to be able to use our process to identify undiscovered talent. And I think your viewers have seen how amazing of a job that company, that board, that management team has done to be leaders in their respective space. Our investment process, I think, is kind of our secret sauce. When we say we find needles in a haystack, well, how? Well, our solution was to build a magnet, and this magnet is our venture build model, which kind of comes back from what I talked about earlier, from the online dating space, this venture build model. So before we make an investment, we only want to go into areas where we understand there's a big market opportunity and we have some competitive advantages. So what we do first is, before we look at any investment, we identify a pain point in a market. We figure out what are the core competencies we have, what are the pain points we see in our existing ecosystem of businesses, so that when we go and invest in a company, we know that at a minimum, we can be the first customer. Two, we'll also go and find a large customer in a large addressable market, before going and finding a company that we want to invest in. In a lot of cases, startups build product without a customer, and by the time they go and sell it to the customer, they realize that it's not what the customer exactly wants. So we want to start off by ensuring that whatever we're investing in, whatever we're building, there's a customer immediately, so that business can generate cash flow. Once we identify the pain point or have a client that has a major pain point, is we go in and search the world for some of the top minds and startups working on this. Over the last 2 decades, we've established relationships with 80 accelerators around the world. So from North America, South America, the Middle East, India, Europe, tech is borderless. Greatness is coming from everywhere. So because of those 2 decades of building and businesses around the world, we've established some really, really good funnels into accelerators in all of those markets, to have vetted agents kind of evaluate companies for us. Once we've found that company, we then bring that company into our own ecosystem and validate their technology, or we bring it into a large customer to validate their tech, so that they immediately have a big customer in a market, and then they're able to commercialize that service. That process takes about 12 to 36 months. The sweet part of that is around the 36-month mark, when it is commercializing. Then from a Victory Square perspective, we have the option of spinning that asset out. And this is where it unlocks value for VST and VST shareholders. Once that company has been spun out, it can either, we can do a share dividend, where VST would dividend out shares in that new company to our shareholders. Two, we can sell a position, part of our position in those companies. Now, we believe long term in those businesses, but we can dilute some of our ownership stake and pay out a cash dividend to VST shareholders, or we can reinvest that and continue to compound the growth that we've been seeing in our business. Right now, again, we've mentioned Fans Unite, which is a lot of your viewers are familiar with, as the first example of the company that had been spun out and the success of that. Fans Unite came into the ecosystem at a market valuation of around 2 million Canadian dollars a couple of years ago, and now it's publicly traded. It's on a tear, well capitalized, great leadership, with a market cap around 150, 160 million dollars. So that's an example of a product that's kind of gone through that cycle. And there's 22 other outstanding companies that are ready to kind of follow suit. When you look at the sectors that we focus on, there are 3 main sectors. One of which we've spent a tremendous amount of time in, another which has been a focus for the last 18 months, and then a third which is kind of coming around. So the first is around next generation internet. So these next generation internet technologies would be considered AI, deep learning, big data, cloud computing, digital media, IoT, cybersecurity, blockchain. Next gen internet would fall under those categories, and we've got a number of portfolio companies in that space, all focused on changing the way the world manages information, analyzes data, purchases, consumes goods, and communicates across the globe. 2 examples of that that we're super excited about are Immersive and Game On. So Immersive is a company in the virtual and augmented reality space. It's a wholly owned subsidiary of VST. They're disrupting a market that's going to be worth over $35 billion over the next 3 years. This is a team that's in the right space, but they've also built product for Fortune 500 companies like Intel, eBay, Allegiant Airlines, the FDA, and on and on and on. So again, not only are they in a really disruptive space with a big addressable market, but they've built product for Fortune 500 companies. So they've got the experience, and their team is made up of rock stars. I think that team now has the resources and tools to be able to successfully execute and bring us another winner in that category. We most recently announced an update. They just released a product called Uncontained, which is the world's first COVID-safe location-based entertainment VR division. So if viewers haven't checked it out, check out our latest news release. There's an amazing video on what they've built, which we're super excited about. Immersive is actually going to be spun out in March or April of this year. So it's going to unlock tremendous value for VST. Another example of our portfolio company is Game On. So Game On was a recent acquisition. The company came out of Techstars New York. It's led by a really bright CEO in the tech space named Matt Bailey, who's originally from Australia. And they built technology that is making the TV viewing or streaming viewing experience more social. So they've partnered up with Comcast and NBC Universal. They've got great distribution, great pilot projects. They're cash flow positive or cash flowing right now, but going to be reinvesting in their business. And they'll be spun out end of February, beginning of March. So again, those two companies, kind of are our next generation internet examples of our next generation internet companies investments, and they're going to be creating a lot of value for VST. The other sector, which is, we've spent the last, I would say, 18 months on, is all around the digital health space. So we've seen rapid innovation around DNA sequencing, gene editing, CRISPR therapeutics, agricultural biological molecular diagnostics disruptions in those spaces. All of those spaces improve the quality of life. They help increase drug discovery, all about restructuring healthcare, and all quality of life type businesses. Over the last 18 months, we've seen a tremendous amount of momentum in that space under one of our portfolio companies, Victory Square Digital. So we've got, I think, over 10,000 health professionals across the U.S. In over 50 states, with a pharmacy 503 license. Those two items are going to be pillars of a telehealth platform that we'll be launching shortly in the discrete care space. So treating embarrassing cases over a telehealth platform that's proprietary. Two, a telehealth service for the hospitality space, which we've had some very good inroads in that space to be able to launch that product. And then we've recently made an acquisition in a company called Hydrate. So Hydrate is on-demand and on-site mobile wellness. What it's allowed us to do was increase our team, but more importantly, our the number of services under Victory Square Digital Health. So Hydrate was performing at-home lab testing, IV drip, COVID-19 testing, Botox, and a lot of other Medispa specialty services. So not only can we provide telehealth services, but we can also have on-demand, on-site, health and wellness services delivered directly to home. So that's one part of why we're very excited about the the digital portfolio of companies that we have. And just to touch on one other company that we had in Brazil that last year, it was a company focused on the diagnostic space, a really smart team that ended up having one of their tests be approved as a rapid 15-minute COVID test, which has opened tremendous doors for them in the digital health space as a whole in Brazil and the rest of Latin America. The third area which we're focusing on, which is newer, but it's going to become a big part of our focus, is around climate change and emergency. Really, around this circular economy, because our survival as a species, will depend on addressing this issue. So it doesn't matter if we've got a great, and disruptive, AI company or health company. If our planet is not there, it's going to make all of those other investments null and void. So climate change and the circular economy are going to become a bigger focus. And it's been estimated that that space itself is a $26 trillion opportunity. So it's a place that we want to kind of play in. So that kind of gives a bit of a overview of the type of sectors we're in, and just some examples of 3 companies that we're very, very excited about. Now, when you look at our team, so I'm a huge sports fan, and I believe building a company is the ultimate team sport. You really need to have a smart group of people, people that are very good at different disciplines, because in a business you've got multiple facets of ensuring that business is a success. So at VST we've assembled, they all say some of the smartest people in the room and smartest partnerships in the world, to give not only VST the best ability and opportunity to identify these needles in the haystack, and to be able to work with and commercialize these companies, but also for our portfolio companies. We're able to provide them with some of the best partners to help and give them the best chance of success. And examples of that are, we have a partnership with here in Canada with Dr. Fakri Karai. He runs the Institute for Machine Learning and AI at Waterloo University in Ontario. And Waterloo is kind of an equivalent to an MIT in the US. It's one of the top-notch universities producing amazing comp sci engineering talent and programmers. And that partnership is very, very strategic and key, not just for VST, but all of our portfolio companies. We also have a partnership with BC Diabetes. The top and head endocrinologist there, Dr. Tom Elliott, is a leader in diabetes care and other types of chronic care. His business, his brand, his patient base have been an amazing avenue for everything we're doing in the digital health space. So again, that collaboration with people and product and data in our ecosystem is a huge strategic advantage for VST. Looking at our cap structure, so we've got about I think we did a financing in November that was a special warrant financing. I think once that's complete, we'll have about 85 million shares outstanding. I haven't checked our share price today, but I think we were trading at around 80 cents Canadian as of the end of trading day yesterday. Market cap around 60 million. I know every CEO says their business is undervalued. I think a lot of shareholders and investors that have done DD on our business, hopefully, the DD that they've been doing is verifying that fact. So it's not just us as a management team saying we're undervalued. Inside ownership is just under 30%. So I'm the largest shareholder. Seeded the company, alongside my business partner with the first, I think $10 to $12 million. So we put our money where our mouth is in this business. Haven't sold a single share, and we're long on what we're building here. And then I love the two-way kind of communication. So I'll try to wrap up the slide deck here with the next slide. But really looking at why invest in VST in general, or why invest now. The primary reason people invest is to make money. So Victory Square is democratizing access to the next tech giants before they're giants. Victory Square shareholders are getting ground floor access to the next set of unicorn companies before they're unicorns. That is really the fundamental why. People want to make money, and Victory Square is that avenue that allows them to do that. We've talked about all the different sectors and themes we're in. We give exposure to investors and into all those themes. There was to reference something. As a child, there was a game that I used to play called Contra, and there was a cheat code in Contra that gave you 99 lives. VST shareholders, in theory, get 23 lives at knocking it out of the park, as opposed to investing in a one-dimensional company. So, the main reason why is that this gives you access to hit a home run, and it doesn't give you one chance; it gives you multiple chances at doing that. Aside from that, in investing and making money, we want to be able to feel good about what we're investing in. And one of the big things about disruptive innovation is disruptive innovation can help transform and solve some of the world's biggest problems. Good innovation, focuses on technologies and companies that are likely to have, a positive impact on the environment, our society, and the world's ability to create further innovation. So, in addition to a great investment to make money, the technologies that we're working on, a lot of them, also can make you feel good about what you're investing in. So, Jack, I'll probably cut that, and it might be good to kind of tie into some user feedback and
audience questions. Okay, let's get into some audience questions. You can hear me okay? Yeah.
Yeah, I can hear you.
Okay, fine. Yeah, we're gonna. I think we're gonna have a lot of questions. So I was taking some notes. Shafin. So let's actually let me just pull this. Hang on a second. Let me get this out, and yeah. So we'll go back to our normal.
Yeah.
I made some notes. So basically, Victory Square, I would call it you're like a unicorn farm, a unicorn farm with multiple shots on goal here.
You said it. We gotta get that capped as our headline.
You're like the ARK ETF, an early stage ARK ETF. You're like the Cathie Wood, but with a beard.
Absolutely, and I love Cathie Wood. She's an amazing lady.
So it's basically the same concept. I mean, this is sort of like seed stage ARK ETF. Same right there.
Same concept, but I would say the one difference is we've found a niche in undiscovered talent. So before they get onto ARK's radar, we're identifying those undiscovered talents from around the world. So ARK, Buffett always says it's not only investing in a good company, but it's entry point. We found the lowest entry point in the undiscovered talent, and then ARK, very similar philosophy, but ARK would be kind of a follow on to a lot of the companies that we invest in.
Okay, let's see. Okay. So guys, ask your questions. I think everybody was like they were hypnotized. So we usually have like a bunch of questions already here. Oh, here we go. Oh, actually, let me ask you first the question. I think before anybody else is okay. So you got there's a couple of catalysts. I think there's a couple of near term. I think which is very which I happen to like here is that you have a couple of real near term catalysts that could unleash some value. How will these spin-outs work? You mentioned 2 spin-outs. Are you going to dividend out the shares? How is that going to work for existing shareholders?
Yeah, so short-term catalysts, we have so much heat coming in over the next 6 months with respect to the spin-out. So the 2 companies that are going to be spun out are Game On and Immersive. Right now, we're exploring one of 2 options, which is to dividend out the shares or a portion of the shares to VST shareholders. That's always been one of the more primary focuses. Some of the feedback we've had from investors, though, has been instead of having them need to learn about a new story, because they've already made done their research to invest in VST, that VST should liquidate some of that position and then pay out a cash dividend. So right now, those are the 2 focuses that we were looking at. The third, which has kind of popped out, which is more opportunistic, is that from a VST perspective, we've started to see that we're, the validation's coming back, that we're getting a really significant ROI on our capital. So when we invest $1 into a company, we're seeing the results right now on the companies that are going to be following, in the footsteps of Fans Unite. So the other argument is to reinvest, to continue to compound the value growth of the company. So from a spin-out perspective, the main focus was to initially do a share dividend or a portion of share dividend in those companies. Some of the feedback from investors is to sell a position of the stake and cash out a dividend. So I think that's really what we're looking at right now. But the third, which is more from an opportunistic perspective, if we start to see tremendous value and opportunities to really compound this or pour gasoline on this fire, then we may reinvest in push the disruption and value even further.
Shafin, so you got started in you were basically starting the .com business in the 90s. Do you remember Safeguard Scientific? Remember that stock? That was like the hot stock, kind of similar to what you're, a little bit different. I mean, a little bit later stage, but that was like the hots, and they were basically spinning out. This was a Pete. What the hell is it? Pete Muster, Warren, that was the CEO. He basically, it was essentially a public venture business started in the 60s or 70s.
Mhm.
And so I think, they were spinning out, all these companies, and that was the hot thing. I mean, I think if you give a share dividend, people will love it. I mean, people love, they love free gifts, and they love the shares. It's like a little extra thing. I think if you do that, it's going to create massive value. I mean, you're going to have a $10 stock, I think, if you do that.
No, absolutely. Like, I mean, I'm the largest shareholder, and I have no intention of selling my own stock. So for me, it's better to get a share dividend because, at least I can participate in, in those run-ups of the portfolio companies. But with your question regarding, Safeguard, I don't remember that company in particular, but it's interesting because during that period of time, almost all of the tech companies were public during the dot-com boom. And when the dot-com crash happened, this network of angel investment and VC, funding changed the landscape. A lot of the next gen tech companies were private. And so as an early investor, you only had access to them if they were geographically located within your region, or you knew someone that could get you access to them. And by the time you could invest in them, they were in the market caps in the billions. And so we're seeing a shift for VST. As an investor myself, I want to get access to the next best companies early around the world, but I want to be able to do it in a public vehicle. I want to be able to be liquid. I don't want to have my money tied up, for 5 years and 10 years privately. I want it to be in something that I can buy and sell it as I see fit, based on management's performance. But also, the ability for that to know that it's audited and transparent. As a public company, we're audited, we're transparent and liquid. So those are some of the benefits where I think investors can get access to. So.
Yeah, no, it's definitely. I think we're getting a lot of comments. People they want those shares. They want the shares. Be very excited because if you have the more of these spinouts you have trading, then it becomes like an ecosystem almost, and it's sort of like it would be very positive.
One note on that. So I think if investors want to do some they can see this online, but in January of 2018, we were actually exploring doing a share dividend in Fans Unite. And at that time, there was a tax, there's a tax reason why it wasn't done. But again, there's precedent that, we have actually publicly come out, suggesting that is a strategy. So I think taking your feedback and from investors, maybe I think we'll put out a vote and have investors vote on what we do. Because again,
yeah, we're getting So here's one of your big fans, Ben who got in early. He wants a combination of small amount of stock, a whole lot of reinvest. I mean, basically, people want they want that's the idea. Okay, so I guess this is my next question, kind of in terms of news flow. I guess news flow. I always ask like what kind of news flow are you going to have over the next couple of months that people can look forward to? Like what's going to be in the news pipeline?
We have so much heat coming. Like with 23 companies, 5 of which are like controlling interest companies. We have, there's not enough days in the week for the amount of news that we have. But I would say the news that we're really going to be focused on is around the spinoff of Immersive and Game On. And everything about the introduction of team and board and product development for those two companies, which there's a massive pipeline, and then everything around our digital health side of things. There's a lot of momentum happening in that space. So I think a lot of our news will be around those 3 things over the next 90 days, and then you'll see our 2020 year end and Q1 numbers pop up for this year, and then just momentum on the other portfolio companies. There's so many companies right now in our portfolio that are doing amazing things that we just don't have enough, kind of airtime to talk about them all.
Yeah, Shafin, what I like about the story is basically, usually, companies that we work with, they have one business, or there might be a few kind of aspects to the story, but in your case, you have like, it's like a diamond, like your name, it's got, you have a very appropriate name for this company. So, because there's so many facets and aspects to the company. I mean, that it's like an endless amount. Let me speak strictly from my perspective, as you know, let's call it from the promotional aspect, is it's like infinite possibilities. It's like, so the story has like infinite legs. That this can, you know, it's very, very exciting, and the fact that you could do, you know, sure, you know, dividends, yeah, it adds a lot. What's the so the NAV? What's your, how do you calculate the NAV right now? I mean, what's the.
Yeah, so the NAV is so there's three metrics we look at: cash invested, the NAV, which is, you know, kind of a snapshot in time of the current value, and what we refer to as the FAV, which is the future asset value, and that's you know, looking at comparables and you know, growth in those portfolio companies. The current NAV right now, I think the last time we did a NAV report was in August or July of last year. And the way those numbers came about was we looked at the last investment in each portfolio company to crystallize what their value was and what that meant to VST. If the company had not done any other additional financing, we looked at comparables in their market on a, you know, like an angel list, to see what multiples were on revenues, and that's how we kind of figured it came together. In July of last year, the NAV was probably between 75 and 80 million Canadian dollars. But today we know that number is significantly higher, and I think we'll have an updated NAV coming out as our 2020 numbers are being, you know, completed. That NAV, I don't want to, you know, guess, but it is significantly higher because it doesn't include anything that any momentum in the digital health space, and it, you know, I think it values our ownership of fans at like 2 million. Like, that NAV number is gonna definitely be significantly higher.
You know, I mean, really, you know, from the investor's perspective, I think the NAV is kind of like, it's a nice guidebook, but really that's not the value of the company. Really is the value add, you know, that you bring, that the team brings in you know, creating, you know, the future valuation. So, you know, getting all those companies. So that's, I mean, so, you know, I don't know what the multiple should be, but it could be, I don't know, 5 times NAV, whatever, because the
yeah.
What's in the past is like, you know, I mean, not really meaningful. It's where you're going, which is important. So
and on that note too, I think like one of the big validations with the spin out of Immersive and Game On is with Fans Unite, Immersive, and Game On, that shows a pattern of ROI. You know, as us as good allocators in capital, and that in theory can be a multiple to be used against our NAV. So that's why for us it's very important over the next 60 days that those two companies come out, and we know they're going to perform very well. That cash investment to the snapshot on what the value is will be the multiple that we'll use to figure out our NAV, and that's why we know it's going to be significant.
Okay, so we got a bunch of questions coming in. Here's a great. Wait. This is it. Wait. Okay. Which is your favorite company? Who's your favorite child?
Yeah, it's like asking me who my favorite child is. I think there's so many companies that we're super excited about. If I had to talk about my right now, the children that we're spending more attention on, we're super excited about Fans Unite. Again, great space, great board, great management team, great traction. Game On and Immersive. Again, there's consistent themes on Fans with both of those two that we're excited about. And then, Hydrate and what we're doing in the digital health space, both here in North America and in Brazil. Those 4 are right now, are the ones that we're spending more attention on. But you'll start to hear there's some amazing stories, other stories in sectors where there's just tremendous traction on some of the other portfolio companies.
Okay. What's the typical percentage ownership that you take?
So in the 23 companies that we have, we generally only get involved in companies where we take a material stake, which is a minimum of around 20 to 23% at the low end. We act as a co-founder. So before we make an investment, we already know that we have a solution or a pain point that this company is going to solve for us, and we roll up our sleeves and get active. So for the majority of those companies, the ownership stake is at least 20 to 23% from a material perspective. About 5 of the companies in our portfolio, we have a controlling stake, which is over 50. But and then there are probably like, you know, 2 or 3 that the number is under 10%. But generally, you know, material stake of 20 to 23% at the minimum.
Okay. Again, yeah, I think I don't even know if I asked this. Yeah, I think a lot of people want those share. Are you going to do the share dividends? A lot of people want the share dividends, it seems like.
Yeah, I think one of the questions you asked earlier, I think from one of the viewers, Ben Baker, I think you mentioned his name. He talked about a combination of you know, of a share dividend, a small share dividend, but to reinvest the cash. My gut tells me that's going to be where we see the biggest value for VST, and which ultimately will benefit shareholders, is to, you know, to dividend up, you know, some of the share perspective, which again is great for the portfolio companies to you know, give them a built-in kind of audience, but to reinvest, because you know, again, we're seeing tremendous opportunities from around the world, great entry points, great companies that we think, again, all will be 10, 20x for VST. So, you know, we don't want to lose out on those opportunities for shareholders. We're long on this, right? So,
so we get a question. Are you any future financing rounds?
So right now, the company is, you know, is got tremendous access to cash. There's probably $4 to $5 million in the till right now. We operate very lean. I think our burns maybe like 65, 70 grand a month, like super minimal. And you know, if we see opportunity, I've always in the past, I set up a $10 million convertible note that, you know, the business has access to, you know, for opportunities in a timely fashion if need be. Now, if we see our share price, you know, appreciate, and we feel like there's a great entry point to position some other institutional investors, they're going to create value over time, then we'll explore additional rounds of financing. But you know, when we did a financing last year, is because it was one of our goals last year was to diversify our investor base and start to get family offices and institutions onto the story early, because we know over the next, you know, 5-10 years, they're going to be strategic if they've, you know, if they've got a position in.
Yeah, and they could, you know, bring you deals. It's good to have
absolutely
partners. What are the biggest challenges that you're facing in 21 this year?
2020 was at the beginning of that year. That's where we felt that we were going to have, you know, a tremendous number of challenges, and I think that, you know, what we saw, how we saw our team and our portfolio companies kind of rise up to the occasion and go on the offense as opposed to being, you know, in the fetal position when COVID hit, I think really prepared us for any sort of white or black swan event that's coming. From a strategic perspective,
actually, all your businesses are a benefit from COVID.
They do.
They
did. Yeah. They did, and they're recession-proof businesses, right? Yeah. Like gambling, health, gaming. They're all you know protect against those types of downs. But I think if I had to look at this from an investment perspective, you know, history repeats itself, and over the last, you know, 2-3 decades, I've seen, you know, bubbles form and then a correction and pullback happen. And before COVID, we had strategically been expecting that, and so we ensured that our companies were in a strong cash position, and that actually helped us when COVID hit. But because we thought there's going to be a pullback and a potential recession, because we've, you know, been riding one of the biggest bull market rides of in history. What we didn't expect during COVID is for the markets to keep rising. Yeah, and so, but from a company perspective, this is how, from a challenge, the challenge we're looking at is about ensuring that we're ready for anything, you know, that we're prepared. Our companies are in a good cash position. You know, the product and teams are sound. You know, they're preparing for you know, the worst, but they're also ready to accelerate if things keep going. And I think that's that from a challenge perspective. We met that challenge last year, and it's really kind of put us in a good position to be ready for anything. If there's a pullback, great. We'll go on the offense and go after all the distressed assets to further accelerate, because we know that if there's a pullback, eventually it's going to come back again. And that's kind of how we're approaching, you know, any sort of challenge that gets thrown at us.
Do you have any analyst coverage right now?
I'm not aware of any analyst coverage as of now. I believe that's going to change over the next couple of quarters. I think when our 2020 numbers come out, I think that's what's going to really, because they're audited as well, that's what's really going to get us on the radar of a lot of analysts. You know, for a small cap company or a company trading on the CSE, exchange to have, to deliver the type of results that we have and positive earnings per share that we have, and consistently, I think that's going to, those numbers, when those numbers come out, will get covered.
So I guess we have a comment here. So yeah, so I guess he's saying all you need is 1 or 2 of these things to be unicorns. I think if you have, you do a little dividend, share dividend, that'll, and then you keep something, that'll be very, I mean, is there any reason why the stock can't be, I don't know, $5 by April?
No, there's no reason. I mean, I think the comment you just pointed out, we didn't set out to build $100 million company. We set out to build $1 billion company, and that's why this approach of having 23 lives, 23 shots at it. When you're looking at disruptive technology, like platforms that are going to be trillion-dollar platforms, that's why we're going at in the sectors we're at. That's why we're going to the spaces we're at, and that's why we have the depth of portfolio companies that we're at. So there's absolutely no reason why we can't be at that dollar value per share, and that's our goal.
By
our
April,
goal is
by April.
Oh, by April. Oh, so by well, I mean, to me, I mean, we realize we can't control the share price.
Right.
What we can control is continue to execute at a high level. Eventually, men lie, numbers lie. Sorry, men lie, women lie, numbers don't. So eventually, someone's going to get wind of those numbers. And for us, can't stop, won't stop. Like, we're just going to keep forging ahead, and someone's going to, people will jump on at whatever point they do. Whether it's April, March, Q3, Q4, it's not going to impact us. We're cashed up. We've got 23 portfolio companies in the hopper, and we're ready to rock and roll.
Interesting question. What do you feel is a fair market value based on the financials? $10 a share. What should the stock? Actually, let me ask you this.
Yeah.
About the financial, what should the stock be worth right now, in your opinion? And you give us an honest answer. It doesn't have to be anything crazy. I'm saying it doesn't have to be $10.
I don't even know if I can answer this question without getting into trouble.
Yeah.
So let's
stop.
Well, yeah. Well, if I had to give you, if I had to, to kind of back this up, I would. Our goal. So within our financial models internally, and between you and just all of us on this report right now, we did internal modeling on 3 figures: our cash invested, in July we did this, our NAV. So what the current value of those assets are, and based kind of on how we found NAV, and what the future asset value is, and in looking at the growth on each of the portfolio companies to see where they may be trading. That future asset value, as of July of last year, was around, it was over 200 million, maybe 250, 260 million dollars, which I think at that point with our share count at that level, was around $4 a share. Now that's our internal modeling. That's what we use to mark our numbers on a quarterly and annual basis towards what we want to keep going forward on. Now that number's changed because the companies in that portfolio have continued to grow. Some have grown at greater rates than others. But if I had to justify numbers that we've looked at from our financial models, that's kind of where we've been seeing it.
Okay. I mean, with this, with the current valuation, I mean, what is it? 70. What is it? What's the market cap now? 70 million or something based on today's price?
I think it's around 60 million Canadian.
Canadian, yeah. So so I mean, all you need is like one tiny success that pays for the whole company, basically. I mean, that's like, I mean, there could be, I mean, there could be like 5. There could be 5 of those built in. That's why I'm coming up with this like $5 number. Well, I guess 2 reasons. One is, I mean, I'm looking, I'm looking for those companies which have that 10x upside, but at the same time, you do have like built-in catalysts in the company. You have some built-in stuff that could be, so it's a very easy path to get there based on the.
Absolutely. I mean, just look at Fans Unite as one example. That's just one. And then you'll see the pedigree.
Well, Sheffield, when fans, let's say, okay, so you own how many shares of fans does
We have about 8%. We have about 8%.
How many shares is that? How many shares do you have?
I think it's between 12 and 14 million shares, I think.
Okay, so 14 million. So let's say, okay, so fans goes to 250, which I think it's going to be there in the next, like, within the next few months. I think it's going to be at least 250. So that that in itself is, what is it? That's
like $30 million.
Yes, yes. I mean, that's a nice. That adds 15. Yeah, that's one. Yeah. So then there's a lot of catalysts. Okay, let's see if we have.
And Jack, to your point, when we talk about immersive, like, there's a comparable, and I think you may have actually had them on, but Next AR Tech. I mean, they're trading at a $450-500 million market cap. Immersive, again, would be very comparative to that. That's a company that's wholly owned under the hopper. So 7-figure revenues, year-over-year growth, Fortune 500 clients, new product release.
100% of this immersive.
100%.
100%. And how much are they doing in revenues right now, approximately?
So they're I think they're just under 3 million in the last annual year.
And it's pure AR.
It's VR and AR.
So VR and AR. Okay, so yeah. So I mean, it's a lot. It's basically a lot more revenues than some of other companies we've had in the AR space, pure AR. Yeah. I mean, I don't want to. Yeah. I want to say diplomatic. I want to say, but it's a. I mean, it's a substantial amount. I think. Yeah, and so this is a lot of interesting catalysts. That's kind of what I like about the story. I mean, I'm a little bit biased. I like this story because you got so many things to talk about. Let's see here. We got any more questions here? I think we got to wrap up here. Okay, so let's just cover. Okay, when 2020 earnings, when is that coming out?
I believe they're coming out in April.
Okay. So Shafin, let's kind of wrap up here. You have news flow over the next couple of weeks, months. You have stuff in the pipeline.
We have news flow, next days, weeks, months, years.
Okay, and I'm going to ask you last question. We ask everybody, and in your opinion, top 3 reasons why investors should consider Victory Square shares right now.
Well, I think we kind of touched upon that. Investors are investing, the primary reason investors are investing right now is to make money. We give them access to, we give them ground floor access, to the next set of unicorn companies before they're unicorn companies. These are we're democratizing access for investors to this. So the primary reason to invest now is there are 23 chances of hitting a unicorn. That's why I would say right now is the time to invest. Coupled with the fact that I think the entry point for VST is great right now. And the second part of investing now and being a part of a ride that's just getting started is also the fact that we're investing in disruptive technology. So we're giving investors access to a wide variety of themes, but as opposed to having them independent, they're getting them all under one hood. So they get access to any movement in digital health, any movement in blockchain, any movement in AR and VR, any movement in gaming, any movement in cybersecurity, all under one hood. And a lot of those disruptive technologies that we're building, people can feel good about what they're investing in because a lot of our companies are solving pain points that are going to make the world a better place. So you can make money and you can feel good about making money.
Yeah, I mean, you're in all the right themes right now, all the right themes at the right time. So fantastic. Okay, Shafin, we'll catch up with you next week. We'll hopefully we'll be able to have time to answer questions. We'll go into some details, like some detailed conversations about the upcoming companies, and we'll thank you everybody for joining us, and we'll see you all on the next live stream.
Yeah, thank you so much. And for the next one, I think if viewers have questions that they want us to dive deeper into, they can send them to you or us, and we can really go and answer the questions that people want to really know more about.
Perfect. Yeah, we'll definitely do that. Thank you, guys. Okay.
Thank you so much. Cheers.